Today, I want to run through why the UK housing market is still one of the best property investment options out there. We'll look at underlying reasons why that is so. We'll give you some important data and information so you can do your own research, and stay tuned for the last reason because it's by far the most important. Now, for those of you that don't know, my name is Nick. I'm Managing Director of Verta Property Group. We've got a network of over 30,000 investors globally. We help investors purchase new build and off-plan properties across the UK and Dubai, and we guide them through that full process from start to finish completely free of charge. As a result of that, I've dealt with lots of housing markets, lots of developers, and really understand that process from start to finish. Now, what I want to do today is go through those reasons because the UK market sentiment is very, very negative. We have constant headlines about government decisions, planning policy, regulations, tax, etc., etc. As a result of that, some landlords out there, some potential investors are considering whether it's the right move and whether they should put their capital into the UK market or perhaps consider another asset class or overseas property market. But today, I want to give you some underlying reasons why the UK still should be up there in your number one, number two, number three position. So just to set the pace here, as I mentioned earlier, I cover the UK and Dubai markets, okay? I've been working for developers, investment agencies, running my own real estate agencies for 5-6 years. I've operated in the UK and Dubai and had a RERA regulated agency there. We still sell Dubai property, but the UK is our core focus. But I am unbiased, so I'm able to give you perspectives from both. However, today is leaning more towards the positivity of the UK. So let's get into it. Here are the 10 reasons why the UK is still fundamentally a strong investment choice for property investors in the years to come. So, number one is the massive undersupply. There is a chronic shortage of housing. The annual supply at the moment in the last financial year was around 208,000 homes, which were produced according to government data. However, the National Housing Federation said we need about 340,000. There are reports online that we've got a shortfall of 4.5 million homes, second lowest in Europe, so in terms of supply. So that is a factor that we've really got to take into account. We're an island that desperately needs property, and as a result of that, if you're investing into these assets, you're purchasing what is fundamentally a scarce asset. So that's the first reason, the chronic shortage and undersupply of housing in the UK property market. The second reason is the deposit level. So whether you're looking at what the deposit level the developers set, or if you're looking at the regular buy-to-let or even residential mortgage deposit levels, if you're a residential buyer, then you're looking at 10%. If you're looking at a buy-to-let mortgage, then you're looking at a 25% deposit needed, so about a 75% loan-to-value rate that we call it. If you compare that to other global markets, like for example, if you were to invest in Dubai, for a mortgage as a non-resident, you'd be looking at a 40% deposit level. Some of the developers there expect 40 to 90% of cash during the construction period. So when you compare that to the UK market, getting in at a 25% deposit level and leveraging is still very, very attractive. Now, moving on to the other point, the next point, should I say, affordability. So the average house price is around 8 times someone's average salary in the UK. So it's becoming less and less viable, harder to save up for initial deposits and actually harder to enter the market. Now, it's not particularly positive. You know, we've all got people that we know and want to get onto the property ladders and start investing, or property ladder, but it is a fact that it is harder to do so. So if you're in a position where you can, it does make it more attractive. So reason number 4 would be the tax structure. So if you're purchasing in a limited company, you can make substantial savings. If you structure it correctly, there are benefits to be had. I'm not going to go into too much information on that right now because I don't want to give tax advice online. However, speak to an accountant, speak to a tax advisor, and you can structure it so you're optimizing for tax. Now, the other aspect to consider, the next reason as well, is because it's a soft market, buyers are in a great position to negotiate with developers, with end users, or what we call secondary market, so people that are selling on Rightmove and Zoopla, and you can secure incentives, okay? So you can secure discounts, you can negotiate, you can get stamp duty contributions, legal fees covered, free management services, free furniture packs. if you're negotiating, if you're working with the right consultancy firm, then you should be able to get those discounts, which you wouldn't be able to get in a hot market. So, for example, people say to me, you know, stamp duty's high, stamp duty's high. Well, if we can get £5,000 from the developer to go towards your stamp duty, then it does minimise that, you know, outlay that you'd have to put up front. So keep that in mind. It's good conditions to be purchasing. Now, reason number 6, regulations, legal protections, a robust, legal, mature system. Now, people in the UK take this for granted, but having that, you know, clear contracts, having that solicitor there involved when you're purchasing property, having very clear guidelines for landlords and tenants, albeit in the tenant's favour very frequently. It is a very clear and very fair infrastructure where we know where we stand. You don't get that in other markets. For example, if you buy in Dubai, during the purchase process, there's no solicitors, okay? There is no legal requirement for there to be a solicitor or conveyancer involved. So you're going to get given a big contract, what they call a SPA, a sales and purchase agreement. You have to go away and read that. Yes, you can appoint the solicitor, but there's no routine solicitors who are like absolute experts in the process because it's not a legal requirement. So, sorry, I should reword that. I'm sure there are, you know, legal experts out there, but in a regular purchase, you know, 8 out of 10 buyers are not going to use a solicitor in Dubai, where in the UK, you'd have to for every time as well. Now, moving on to the next point, interest rates. Goldman Sachs forecast in the coming years that these are to drop. This will increase your rental yield, increase your cash on cash returns, and make it more financially attractive. Next one is overseas investment into the UK market. Believe it or not, Dubai developers are coming to the UK. So you've got Arada, you've got Damac that has built in London. Arada, I should say, they've just taken an 80% stake in a massive East London project, which is to deliver, you know, thousands and thousands of homes. They've taken an 80% stake in that company or entity. I'm not exactly sure how it's structured, but you know, it's got a gross development value of 2.5 billion. So mega money that's being ploughed in. You've also got Alder buying up lots of sites. They acquired a company a couple of years ago, and they've bought up, you know, 15 mega plots and sites. They're land banking, which means buying up land that they can sit on and then build on when the time is right. So you've got these mega corporations that are piling into the UK market. And this is just a couple of developers that are reeled off from the Middle East. You know, I'm sure there's way more. You have to consider UK developers, these big corporations. Even if you look at Lloyds, Blackstone, probably BlackRock, I can't remember who exactly, but these worldwide mega corporations and asset managers are all ploughing money into the UK market. So that should give you an indication that it's, you know, fruitful for the future, and that ultimately, yes, it's a poor economy now, but it's a great time to invest because you're getting assets at what would otherwise be a lower market rate. For example, if you look at Dubai, how hot that is now, there's no question about it. You're paying a lot more, you're paying a premium because there's so much buyer demand. So keep that in mind. The other thing I'll mention just briefly is the UK any market, any investment market, crypto, gold, silver, obviously precious metals, equities, and property in general, it comes in market cycles. So if you look at the global financial crisis, if you look at Brexit, if you look at COVID, it's like that fundamentally. But overall, if you look at the UK market, the appreciation is very strong. So that's the last point and the most important one that I want to stress. So it is the overarching appreciation rate that you'll get in the UK market. Now, I've got the stats written here. I want to stress this to you. If you look at the UK House Price Index, which is data from the Land Registry and the Office for National Statistics, so genuine real government data, look at the average purchase price in the UK just before 1970, it's just at the end of 1969. The average UK house price was £3,600. The average UK house price just before 1970 was £3,600. Of September 2025, the average house price in the UK is £272,000. So that is a 75.6x on your investment. In other words, a 7,500% rise in property values. Okay? Decades and decades of consistent growth. This is by far the most important thing that you need to consider, that you need to think about. Everything that happens in the short term, the micro conditions, is almost irrelevant. You need to know in decades' time, is this going to consistently appreciate in value? Am I going to get consistent cash flow? Am I going to have assets to hand on to my children or to build wealth I can take equity out of and roll into other property developments? That is the most important thing. And that data is, black and white evidence that that is definitely the case for the UK housing market, which, by the way, if you don't believe me, have a look at other markets across the world. What's their average house price been since 1970? And it will paint a very, very different picture. So keep that in mind, guys. But I reeled through them really quickly, not to make the video too long. Hopefully that gives you some really important insights. So more challenging to get on the property ladder as a fundamental undersupply in the UK. These big corporations and investment firms, both developers and asset managers, are piling capital into the UK. The deposit levels for mortgages and from developers is very low. The regulations, the compliance procedures, the robust legal structure makes it a fair playing ground, so you know where you stand, and it is relatively efficient despite all the complaints from people. And lastly, we've got decades and decades and decades of government data showing you the slow and steady capital appreciation rates of UK residential property. I'll wrap that up there, guys. If you want help investing into the UK property market, click below, click the link in the bio, and I'll be happy to assist you personally from start to finish in purchasing UK or Dubai residential properties. Speak to you soon.